Hey guys, welcome back. Patrick here. I decided to scrap the video I was working on. I mean, it's a good video, but the thing is that there's so much pain in the market right now. Everyone is depressed, and I don't think many people are in a buying mood. And that's the big issue, is that right now is the best time to actually be buying stocks, but no one has cash left. So in this video, we're going to talk about the tough choices that we need to be making right now. I'll tell you about my stocks, my thoughts on different companies, right? Palantir, Sofi, MGM, ASO, a lot of them, AMD, I have tough choices to make there too. What I'm going to be doing with them, because I'm going to be buying some, I'm selling some, because in this environment, there's only three things you can do. You can deposit more money in your account, which we don't have unlimited resources. You can go into margin, which currently is kind of like a little too risky. Or third option is you sell some and you buy other things. You consolidate into your highest conviction plays, which is what I'm mostly doing. So let's get started. I know everyone's feeling the pain, me too, but hopefully this helps you a little bit figuring out what you want to do. All right, now let's move on to individual stocks. What am I selling? What am I buying? Which ones am I just hodling? And quick shout out to the Patreon. If you guys need support, help thinking about different stocks and strategies, and especially right now as everyone's losing money, if you want like a support group, look at the Patreon. And also anytime I do transactions like a lot of these, I put my transactions in the Discord and the Patreon so you guys will know what I'm actually buying and selling. But let's go over some of these. I actually sold Triple Q recently. If you look at Triple Q, which is a triple NASDAQ ETF, wonderful when the market is actually going up. But when the market's pulling down, I mean, this one is taking a severe beating. So I actually sold right here around 150. So it actually split by two recently, right? So if you look at the chart here, for myself, it was at 150, but now it's split and it's at around 75 at this point. But look at how much it pulled back over the past couple of days, right? Down to 56. So again, if you do times 2, that means that currently in what my prices were, that would be 113. So in a matter of like a couple days, if I actually held this, I would have lost 1/3 of my investment. So thankfully, I actually sold out of this one when I did, and I was able to raise a little bit of cash with that. Wasn't a big position, right? I just wanted to have a little bit more exposure to the NASDAQ, thinking that it was going to recover, but since it didn't, thankfully I sold out of it. Now, one that is very difficult, and for those of you that are following the channel, you might not like me saying this. Unfortunately, I had to sell out of Play Studios, even though I had it more in December. Again, I'm not perfect. I make mistakes too, right? When I said that some of the stocks that get sold first are the stocks that are a little bit more speculative, well, this is one of them. So currently, there's just no traction for this stock right now. And I don't expect that their earnings that are coming up soon is going to really make the share price go up to $7 or $8. So this is the type of stock where I like the company as a spec play. I mean, if in 3 months the market recover and it's still at $4, maybe I'll buy back into it. But in the short term, I just had to take a stance. I actually sold it to raise cash, right? So I'm not happy about it. And if you guys actually are in Play Studios, because I talked about it, you know, it is what it is, right? I have to do what I have to do to protect my own portfolio sometimes, even if it sucks. So Play Studios is one that I actually sold to raise cash. It wasn't a huge position, but I raised maybe like $15,000 with it. Then Palantir, I'm just hodling Palantir. So currently it is falling off a cliff. I mean, it has absolutely no support. No, I don't believe that Palantir is a $5 stock. No, I don't believe it's a $2 stock. But if you're telling me that Palantir is going to $12, $11, even $10, I can see it happening. So this is the type of stock where that's why I'm actually raising cash, so that I can support like this stock and maybe potentially even like dollar cost average down by buying more shares. So when it comes to Palantir, I'm just hodling, right? They keep announcing great news. I expect that they're going to have fairly good earnings coming up. So this one, no change there. Next stock, we have Sofi. You guys know that they add the bank charter recently, and I didn't make a video about it, but As you can see, I mean, there was a pretty good spike, nice little rebound, which is selling off. Currently, no one trusts the market. I mean, if you actually look at the chart, you'll see that, yeah, it actually had a nice little bounce, right? But we never able to, like, achieve a lot of people holding in this long term. This was probably mostly just traders buying into it, and as soon as the market turned, they just scalped their profits, and now they're on to the next stock. So the stock will probably go back down to $12 or $13 unless they have very, very strong earnings. And this is the only thing that's going to save SoFi, right, is in 2022, they need to continue to have good earnings, and over time with the bank charter, like when that starts to take effect and have more of an impact, hopefully they'll start generating profits. So SoFi, no change. Like, I know it's going down, but at this price, I'm not selling. I'm just going to keep hodling it. Enphase is one of the stocks that I am actually buying right now. So some of the money that I got from selling Play Studios, I am dumping into Enphase. This is my #1 stock. I was going to put that in the video I was working on. This is my #1 priority. So back in the summer, where is it? Sorry, it keeps changing. Back in the summer, I actually bought this stock at $145, and it went on a massive run to $280. So I was like, hey, it's too late. I missed my opportunity, right? This stock is running now. We'll never be able to get back into it. Well, now we finally have a second chance at an even better price than back in the summer. This stock is phenomenal. If there's one stock in the market that I know 99.9% sure is going to go up this year, it is Enphase. The revenues are going to go up. The profits are going to go up. I am going all in on Enphase. I want to make it one of my top positions. All right, so if you guys are interested in Enphase, I can take like part of the video that I actually filmed yesterday and actually publish it if you want to learn more about it and see what my thesis is on it. But Enphase is one that I'm currently buying. Even today, I bought shares, right? It feels bad. It's tough. But I actually went ahead and bought shares, even as the stock market was crashing. All right, next up, we've got Facebook. This is one of the crown jewels in my portfolio. I don't have a huge position, but it is one of the companies I feel is very safe right now because the company is so profitable that even if the market is selling off, it doesn't matter. This is a stock that you want to get into, and over time, it is going to rebound because they just print money like it's nothing for them. All right, so I started buying into it right around here at 250. There was a nice run to 384. Since then, it has been pulling back with the rest of the market, and it is expected that they are going to go through a couple of rough months. You guys might have heard from like other YouTubers that the ad rates are really low right now. So they might report a great fourth quarter, but then their guidance for 2022 might be a little bit weaker. So I would not be surprised if we go under $300 and, anywhere between 250 and 300. In my personal opinion, that is a buy zone, right? I am willing to actually buy more shares. And that's the thing, is that you have to look through your portfolio and think of, like, which companies do you like most? Which companies do you feel are safer and have more potential? In my case, I feel like Facebook has more potential than Play Studios, just because of the fact that they have so much profit right now that even if the company has a couple bad quarters, it doesn't really matter, right? A bad quarter like the last one was them making $9 billion in profits. So I'm willing to wait it out. I believe in the metaverse, so yeah, I'm going to buy more Facebook if I can. AMD, though, is a tough one. AMD has been crashing. My cost basis for AMD is 77.5 approximately. It had a huge run to 164, and now, as you can see, it's falling off a cliff to 118 as absolutely no momentum. But thankfully for me, I had underwater covered calls on this stock at $105. So while the stock has been pulling back, it's actually helping my position. I'm going to be able to actually buy back my covered calls and probably not lose any money or actually make profits from it. So this one, I would like to buy more if it keeps going down. I wouldn't be surprised if it settles around the low hundreds. and we'll have to see. Like, the big benefit for AMD is that they are beating Intel when it comes to the servers. And again, if you believe in the metaverse, do you think there's going to be more servers in the future or less? To me, it's pretty obvious there's going to be more servers in the future, and this is where their profits are coming from right now, because servers are much more profitable than just the graphic cards that they sell to private users like us for their computers. Right? So since they're making inroads with the servers segment of their business, they're becoming more profitable, and I do believe in AMD. So I might I wanted to maybe sell them, just let them go because they were so far underwater, but now I might just buy them back and keep AMD. I think they'll continue to go up over time. Let me know in the comments if you actually like this type of format where I just give you my candid thoughts on different stocks. I know that the video is running a little long right now, but I want to go through them. I hope some of you actually enjoy it or it helps you. So next up we have Laser Luminar. This is a stock that I absolutely love long term. The CEO, Austin Russell, to me is a mini Elon, and he will bring them very far. But the thing is that the company constantly announces great partnerships and the price still tends to go down, right? You have these big spikes and then it crashes. Spikes, crash. And that's what happened. I actually bought into it at $14.50 and I thought, wow, what a great deal, right? Then it went up to $18 and I was like, hey, nice little quick profits, even though the market's crashing. So that was pretty good. But look at what happened after the Mercedes announcement a couple of days ago. Now it's back down to $13.30 under my cost basis, right? So this is why this market is so painful. You have all these little fake outs, but this company, I'm actually willing to, hold through the pain because it's not a huge position for myself, right? I think it's like, at this point, it's worth maybe $8,000 or something like that. So I'm just going to hold it. And I do believe that over time, especially when they get into production later this year, it is going to recover. And since they constantly announce big partnerships, well, it's just a matter of time where it's going to actually rebound, in my opinion. Next up, we've got Proterra, another very tough one. Proterra, I was doing pretty good on it, and once again, it has crashed over the past week, right? So if you notice, it had gone up to $10.41, and my cost basis was, I actually bought at $9.99, but at the same time, I did a buy right. So I bought at $9.99, but I sold a covered call at $10 at the same time. So it really, really lowered my cost basis to the mid $8. But look at what happened. I mean, we went from 1041 to literally 757 in a matter of 1 week, right? So I went from doing really well on that position to now I'm down under my cost basis. So this one, again, I'm going to just be holding it. I do feel like they are going to be doing well this year. Plus, once again, these are smaller positions, right? So I'm not as concerned with them. Even if the stock goes down 10%, it doesn't feel good, but it doesn't cripple my portfolio like some of the bigger positions do. All right, so then you have MGM. You guys know that I love me some MGM. This company has held up very well over the past couple of weeks. Yes, it went down from, the peak at 50 something dollars, but overall, like, it's fairly stable because the company is buying back so many shares that it supports the stock. Now, I'm giving you guys a preview, right? Talked about it with some people in the Discord earlier today. Next Monday, I might have to sell MGM. And that would be a very, very poor thing for me. I don't want to, but this is a type of stock where, like, in this environment, you have to sacrifice sometimes. I would be willing to sell MGM at $40, $41 to give myself more cash so I can invest in the companies that I like more, like Enphase. All right, so this is a little scoop for you guys. If I have to Monday, if the stock market is down, this is one of the stock where I still have some good profits, right? So even though I'm losing some profits, I'm still well ahead in it. So I can see myself actually just selling it and using the cash for something else. So I never want to look two-faced with you guys. Sometimes I make a video and I'm really talking positively about a company, and then a week later I'm actually selling it. I know that sometimes it doesn't look great, but we're having tough choices to make right now. I have to sell some things. So I have to sell something that actually makes sense. And unfortunately, companies like these are the one that makes sense because I'm actually profitable on them. I hope that makes sense. I hope you guys understand, right? It's not to lie to you or anything. It's just that I have to do what I have to do to protect my portfolio. Same for ASO. Like, these are the type of companies that are really crushing us in this market. They were doing so well. It had gone up to $44, $45. It had a lot of momentum going around the Christmas Santa Claus rally. And look at what happened to it, from $44 down to $36. Now, do you think this is a speculative stock? Absolutely not. This company is generating very, very nice profits, right? It's going to be growing in the next couple of years. So why is it selling off so badly, to the point where, over the past couple of weeks, my strategy was, hey, it's okay. I can actually go into a little bit of margin. It's not a big deal because I can buy Enphase, I can buy Facebook, a couple of the other stocks. Worst case scenario, if the market does go down, well, I can sell some of these value stocks. When it was at $44, I felt very confident about it, right? So I'll just sell this one, I'll raise cash. It's going to make me very safe in the market. But when even your value plays are getting crushed, what do you do then? That's what makes this market so difficult for us. So ASO, I want to keep it, but I might have to sell it at a small loss. So it's not a huge position. Once again, right, we're talking about $10,000-ish, right? But that adds up when you're looking at different positions. If I can sell 5 of them and generate $50,000 cash to buy Enphase or another stock, I might be forced to do it even if I don't want to. But don't get me wrong, I still think the company is going to do great. They're going to have great numbers this year. They're probably going to be buying back more shares. But it is. All right, one of the last stocks is Tattoo Chef TTCF, and this one is getting close to an all-time low, right? We're back to prices from when the stock had just merged with the SPAC back in 2020. So when people tell me, hey, everything's in a bubble, whatever, man. Not everything is in a bubble. This company has progressed tremendously between now and back in 2020, right? So the company, their revenues are up. Eventually, they'll turn a profit, probably in 2023. They have new factories. They have plenty more products, plenty more stores, that they're selling into. So I don't want to hear it. If people say that everything's in a bubble at this point, I'm just not listening. So I feel like this stock is undervalued at this price. It hasn't really gone the way I would have wanted, but I feel like I would actually dollar cost average down, or maybe more likely when the market does stabilize and we're back in an uptrend, I might actually get leap options into this one, buy call options a couple years out. All right, so Tattoo Chef, I'm not going to be selling it. I feel really bad about it, of course, but I feel like it's undervalued. So last company I want us to talk about today is Lightning Emotors, and this one is another one that's gotten crushed. I feel like it's been talking about this a lot. Do you remember a year ago when I sold the stock, or rather I sold the warrants when the stock price was $14? And I had a lot of comments saying, Patrick, you're making a mistake, you're so stupid and everything. Well, look at where it is now. Under $5 for this company, which is insane because the company is worth almost the amount of money that they have in their bank account at this point. So they had very disappointing earnings where they didn't want to give guidance because of supply chain issues. But personally, I think that Lightning Motors is a pretty safe bet over the long haul. I've been talking to a lot of people about it, and personally, this one I'm actually interested in buying more into it. So I know it sounds crazy when it's been getting beat up so much, but with the warrants at 88 cents and there's 4 years left on them, right? I already do own some warrants, but I would be willing to buy more of Lightning Motors. The company is going to be reporting their earnings. I'm told that they're not only starting to improve their supply chain. You guys know that they've done a lot of partnerships with other companies like Proterra. They're going to be building their own chassis. That's going to be a huge deal for them because they were relying entirely on Ford before, right? And Ford just hasn't been able to give them what they need. So now they're going to be starting to build their own chassis. They're going to do some more automation of some different tasks. So that's going to allow them to probably build more and deliver more vehicles in 2022, 2023. So since I'm buying warrants that have 4 years left on them and now they're under $1, I feel like they're a steal. And again, it is a spec play, but on this one, I'm willing to take the chance. All right, so that's my opinion on all these different companies. So there are more in my portfolio and different accounts, but those are the ones that I want to talk about today. Let me know what you guys are doing. Tough choices, some purchases, some sales. Let me know what you guys think, and I'll see you guys in the next video. Try to have a good weekend.